Global stock markets on average have lost 16% of their value since the start of February. There could be many rate cuts ahead of us in Australia. Is this the right time to buy property? Is this 2021 happening all over again? Well, building wealth and passive income through Australian property is just as possible in 2025 as it was in previous years. Boom or no boom, we consistently outperform the national average by a multiple of 2 to 5 times. Here's my monthly show and tell to reveal real deals that are verifiable, properties that will outperform boom or no boom, rate cuts or no rate cuts, recession or no recession. Clients have bought over 3,500 properties worth over $1.5 billion using this system, saving themselves over $50 million in buyer's agent fees and making over $1 billion of equity. This has happened over almost a decade. Let's go through them so you can see how we're buying these high yield deals, high growth deals, value add deals, under market value deals, and people are using them to retire early, gain some freedom in their life. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. All the deals that I've posted, like I do every 2 days for years and years, are in this group called Australian Property Mastery with PK. The clients who have bought the deals are tagged. You can DM them, verify, ask questions, get advice unilaterally, taking me out of the picture. And that way you can build trust that this is the real deal. There's over 60,000 members. Join, I'll leave the link below. We're gonna go through 9 deals real quickly. Let's go. Arbitrage gets off market under 400K property with 6% yield, grows $80,000 or 21% in 8 months. You might be thinking, well, that was 8 months ago. Well, 8 months ago, I was posting deals bought 8 months before that were having the same results. And 8 months from now, I'll be sharing results bought today at the same price point with the same growth. All these deals are relevant for purchasing today as well, not on realestate.com.au or domain. Some of the best deals, not all of them, some of them can be trash, but off market through agent relationships fast, built over 1 or 2 weeks. These agents want to sell you deals. Sometimes they're really rubbish. You need to see through that through due diligence, but oftentimes you can get under market value deals by being off market. This was negotiated $18,000 off the asking price, and now Abhijit, who's tagged right here, very cool guy, he's bought 2 properties in a single year, saving himself $30,000 in buyer's agent fees in the process. Purchase price was $387, total funds required was under $65,000, the rent is $450. Great short-term data and long-term data. Vacancy rate is 0.91%. Block size is huge at 747 square meters. Build is brick. He bought this in Queensland. Didn't catch a single flight even though he bought this interstate. Why? Because he built a team and had local due diligence done for him for free, for example, using a property manager and with a building and pest inspector as well. That way you don't need these buyer's agents. And he's self-sufficient to just be at home buying properties again and again, rinse and repeat, and building passive income. Here's the deal, and here he is with his good wife. Number 2, Nick gets 110K equity boost after just 5 months. Think about that. And I'm not trying to create some sort of salesmanship, but 100K in 5 months, it's nothing to be laughed about. On 6.2% yield per property, it's valued at 110K more, i.e. 740K, 5 months after settlement. It's got good tax depreciation benefits because it's built in 2003. Anything after 87's got good benefits. 5 bedrooms and 4 minutes from the beach. Nick McGregor, who's bought this one, needed less than $130,000 to get in. Rent is $750. Bought it for $630. Great data, great vacancy rate, great everything. Here's the deal. Everyone needs a property like this. Probably Perth is not the right time to buy anymore, but other areas around Australia, you can get a very similar type of property, similar purchase price with a similar growth horizon. Alex from Melbourne already up 70K in Queensland in 7 months with bonus tax depreciation benefits. These are the same types of results that I was posting in 2021, and people are like, well, that's because of the boom. Right now, there is no property boom at a national level, but there's markets in the markets, and if you use data to hit the bullseye every time, because it's objective, cold, hard facts, data, then you can replicate boom conditions. And Alex Cram tagged right here, this property was only $20,000 less all the way back in 2012. That doesn't mean it's automatically going to grow because of a lack of historical growth, but the conditions are now ripe. The ingredients are in the recipe. The yeast has been put in. You put it into the oven and the bread will expand. That's what's happening. The supply-demand factors are lining up really nicely. This is his 3rd investment property through the course, saving himself $45,000 in buyer's agent fees. Purchase price was $500, needed $100K to buy it. Rent is $540. And he's building passive income. There's just so much misinformation online from course providers, buyer's agents, other people. It's really easy to make mistakes, but data doesn't lie. Neither do numbers, neither do results. Data plus mentoring, okay? Because you can interpret data in all different ways, but you need objective statistical methods to interpret it correctly. And if you do that through mentoring, that can truly accelerate your property investment journey, because the whole process is learnable really quickly. Don't risk giving the keys to your financial future to someone else. Don't become dependent on a property company for every single property transaction. Don't pay a buyer's agent $15K just to send you properties that are either off market or domain on real estate. You can do that easily yourself. And don't be fooled into buying an ineffective bait and switch course from all these buyer's agents that then upsell you to their full service, because the course wasn't designed to work. It was designed to get you into their buyer's agent funnel. No one cares about your money as much as you do. Alex right here realized that very early on, and he's kicking goals, 3 goals in fact: making a lot of money and saving a lot of money. Number 4, Abhilash buys beautiful 6.2 yield cul-de-sac property growing at $10,000 a month. Similar houses have been advertised for $70K more and are now under contract. This is just 6 or 7 months after he's settled. So when we make up these valuations, we're not making them up. They're based on real sales. Includes a 6x4 shed in Abhi's 3rd property this is through the course. Most of my clients, not all of them, some do the course just to buy one property, get it right, because a small difference in growth over 10, 20 years is hundreds of thousands of dollars. So they see the return on investment. Others do the course because they know they want to buy 3, 4, 5, 6, 7, 8, 9, 10 properties. And they want to optimize their journey. They don't want to leave any money on the table. They want to do things efficiently and smartly. Abhilash bought this for $532,000, needed $110K to get in, and market rent is $635, 0.45% vacancy, block size is 780, brick, 1998 build, and he bought this in Queensland. There he is, great guy, great property. Number 5, renovated solid Queensland property grows $60,000 in 6 months. You can see a trend. Generally, if you follow the data, you should be making at least $10K a month. And the environment for the suburb means that the suburb continues to boom, even though national house prices are not booming. They're basically treading the rate of inflation right now. But there's so many suburbs with this similar growth outlook. In fact, more than 100 suburbs across Australia that my clients are buying in that have double digit, if not 20% plus growth rate predicted for 2025. Tenants secured before settlement. You put in some special clauses in the contract of sale, allows you to advertise even before you take the keys. Blaston tagged right here, amazing fellow. 3rd investment property through the course, a bit of a trend here. Total buyer's agent fees saved $45,000 by just not needing them, right? He's a really hard worker actually, Blaston is a really, ethical guy. You should reach out to him. He's terrific. $475,500 is the purchase price, $90,000 to get in. Rent per week is $520, 0.42% vacancy. Brick, 600 square meters, bought in regional Queensland from Brisbane. Here's him and his good partner, and here's the property. Number 6, Daniel Jones buys a $350K, 6.7% yield stunner with a granny flat potential, $20,000 under market value. Regional Queensland from Brisbane. He bought this without going up there. Big side access for the granny flat. When you get a granny flat, I encourage everyone to get granny flats. You generally get a 250 to 450 rent per week upside potential. So great return on investment. Even if you don't act on it right now, keep it for your retirement. It will allow you to have a nice residual income when you want to reduce your work hours. Bought it below market value by about 20K. He's so far made 70K in 7 months. So once again, this trend, and these are all different locations that these clients are buying in, 10K a month. So if you're watching this, once again, I don't want to be too spooky. If you're watching this and you're like, I don't know, let me wait 2 months, let me wait 3 months. All these clients are buying within 1 or 2 months of starting the course. We can't control what properties come for sale, so I can't guarantee you'll buy something in 5 days. Generally, it's 1 to 2 months for the average client. We don't want to make sacrifices. But then you're making 10K a month in equity. If you're sitting on your hands, you have equity, you have borrowing capacity, you have savings, you're not doing it, then that's your opportunity cost. That's what you're missing out, so to speak. Bought this for $350,000, needed just $65K, right? Total capital, including stamp duty and everything, to buy this. Rent per week is $450, 0.72% vacancy, block size 759 square meters. And here's the deal right here. So it's not like these are terrible properties. It's not cheap and nasty properties. Just because it's affordable doesn't mean that it has inferior tenants, doesn't mean it has inferior growth, and doesn't mean that it has a lot of maintenance. Those are all myths. You can slice through that, slice through the misinformation and get going. Number 7, Arpit buys 6.5% yield renovated future cash cow. It will help him retire earlier. Makes $160,000 equity in just 15 months. That's a 44% growth rate. Just to give you some context, since the start of COVID, the Australian national housing market has gone up about 35%. Right? So people think, oh, everything's gone up because of this COVID boom. Well, he bought this way after COVID. He bought this 15 months ago, and it's gone up more than the entire national housing market in the last 5 years. 1999 builds are good tax benefits, low maintenance, recently renovated. And the great thing is we're not just interested in short-term results. This area, because of its great data like building approval, stock on market, inventory levels, etc., you can assess this quantitatively and see, okay, this area is going to carry on performing really well. That's what we want, short and medium long-term growth. Arpit tagged right here, and that's what I really like to do. I like to tag these clients because I know sometimes people will think this is all too good to be true. But when I've tagged more than 1,200 clients, over many years, then you start to kind of, I suppose, build trust that, I don't know, there must be something to it. Reach out. I mean, these are normal people. You can even, I don't know, maybe get on a phone call with them. Purchase price $360, total funds required less than $65,000. Rent per week is $450, 0.79% vacancy rate, 564 square meters, block size 1999 build. Here's Arpit, handsome fellow, and here's the property. Good old Camry at the front. Number 8, one more left after this. Arpit, same guy, tagged again. He bought another one at 6.9% yield and made $90,000 in 10 months at 22% growth. He needed just $28,000 to buy it. How? It's because he used equity from the first one that I just shared. It boomed right after he bought it. He took that equity, didn't need a whole deposit, used that to buy this second one. So he just needed $28,000. It's R2030 zoning, so it's subdividable. That means that when he's coming closer to retirement, he can split the block, maybe sell one, and then the other one is paid off through the proceeds of that second one. And, you were able to retire early instead of slugging it out to your 60s and 70s. And it's on a long-term lease, 5-year lease, okay? So he's not having to worry about this at all. It's a set and forget. He's bought twice now without a buyer's agent. Total fee saved $30,000. 415K is the purchase price. Needed, like I said, under $30,000 to buy. You might have equity in your home or investment property. You don't necessarily need $40,000, $50,000. You might be able to buy your next property just for $20,000, $30,000. Rent per week is $550. Great data, 30 to 35 data factors. When you have so many data factors, they act like checks and balances, so you literally can't make a mistake. Like, there's so many checks and balances built into our system that if you follow them, like, it's really impossible to actually make a drastic mistake. No one can lose money if you go about it using cold hard statistical techniques and data. Vacancy rate 0.63%, block size 728 square meters. Bought in WA. Here's the deal right here, and here's Arpit again. Okay, last deal. Asim, number 9, buys 6.3% yield off market WA monster. 1,200 square meter block with subdivision potential. I actually did a client interview. It's on the client results playlist on YouTube with Asim. So if you want to go and figure out how he did this, it's like a whole 45-minute interview. It's more than 200 interviews there actually. If you do the course or don't do the course, at least you'll get a ton of benefit from watching them. The selling agent didn't actually know that this land was recently rezoned for subdivision potential, and that's where the arbitrage came in. When you're educated, you'll be surprised that even 90%, 95% of the real estate industry, sales agents, buyers agents, aren't educated. And so that's where the potential lies. If you know more than them, you can see through properties, sites, opportunities, and add value where no one thought value add was possible. Similar properties in the same pocket with admittedly one less bathroom was sold $47,000 higher in the same week. One bathroom doesn't constitute $50,000, so that's some good arbitrage as well. And like I said before, it's growing by $10,000 a month. He's bought twice now without a buyer's agent, saving $30,000 buyer's agent fees. Here he is. And this one was $553,000. Total funds required less than 110K. Rent per week is $670. 35 data factors, 0.64% vacancy. Bought this in WA from Melbourne. Clients are now buying in Melbourne. They're buying in regional Victoria, regional New South Wales, still to some extent WA and very select pockets. Specific strategies, especially at the higher price points. Regional Queensland still good as well. There's so many good opportunities across Australia. It's really good to see that it's not just WA and Queensland. Here he is looking dapper, and here's the property also looking super smart. You know, people who are successful, they're no more smarter than you or me or anyone else. Those who are successful simply recognize opportunity and avail it. If you have the affordability in your cash flows to buy an investment property, okay, it might be neutral, might cost $5,000, $6,000, $7,000 a year initially, then become positive cash flow after 1 or 2 years. If you have $60,000 of equity or savings, and if you have 3 to 5 hours a week to dedicate to this over 1 or 2 months, could take longer, it's all self-paced, then the opportunity is there. You could buy a property 2 months from now, 1 month from now, using our system, the Property Investment Accelerator, and start getting $5,000, $10,000, maybe even $15,000 growth per month, whilst having a great yield. Of course, no one's retiring on that overnight. Property is get rich slow, but you got to be in it to win it. You know, knowledge is empowering, but only if you act upon it. This is a great opportunity right now, as they say, buy the dip. That applies for the stock market. In real estate, you got to ask which dip, because some markets in Australia, there's no dip. They're going from strength to strength. It's always a good time to buy property as long as you know where and how. If you don't believe me, continue following this channel, because in 5 months time, 10 months time, 2 years time, 5 years time, I'll still be around and I'll still be posting great results, including those who started today. My name's PK. Hit the subscribe button. I'll leave a link below to the Facebook group where you can join, learn, succeed. And remember, no one cares about your money as much as you do. Not even me. So invest in yourself, because no one else will.